So Dogecoin and crypto holders are going to face a huge blow from the US Fed, and it appears that things may get a bit ugly from here. So let's talk about it and see what exactly is going to happen. But before I come to it, let's see the current crypto market standings. So despite all this Russian-Ukrainian situation and this upcoming warning from the Fed, we are now seeing that there is still some positive momentum in the crypto market. The good thing is that almost all cryptos have been trading in the green, and they are holding quite nicely as of now. And we can see here that the crypto fear and greed index is sitting at the 26th level, and it means that the overall sentiment is now getting neutral after the recent crash. And while things are generally looking good right now, I think that we may see a lot of uncertainty and fear due to this upcoming move from the US Fed. So the thing is that this Russian invasion of Ukraine is going to spread some uncertainty, and it appears that it is going to complicate the Fed's decision of interest rate hike in March and following months. We are now seeing that the Russian invasion has already caused commodities prices to shoot higher, and seeing this, economists are saying it is actually the price of oil that matters most because crude prices can drive up inflation and slow down the global economy. So it means that what happens to oil could also determine whether the Fed raises interest rates in March or ultimately slows the pace due to growth concerns. And since we know that the oil price soared right after the Russian invasion, it is now highly likely that inflation is going to rise from here. As a result, the US Fed is going to raise interest rates to counter this rising inflation. In fact, it appears that the Fed may adopt a more aggressive move to counter inflation. Another thing that can lead towards rising oil prices and ultimately inflation is that the European Union and the USA have now decided to remove Russian banks from SWIFT. So this means that Russia is now going to be banned from making cross-border transactions, and while it is a good step in terms of stopping Russia from escalating this war, this move can be bad for the global economy and cryptos. This is because we can see here that Russia is the third largest oil producer in the world, and without the SWIFT network, Russia can't make transactions, and this means that Russia will not be able to export oil to other countries. So this dip in oil supply will spike oil prices, and as we discussed before, a rise in oil prices will give a further rise to inflation throughout the world. And with this rise in inflation, central banks will raise interest rates, and as I said before, this is going to be one of the worst things for cryptos. Now the good thing for crypto, and especially Bitcoin here, is that Russia may accept Bitcoin to protect it from the Western sanctions. So while we may like it or not, if Russia began pricing its main exports in Bitcoin, then it will be one of the most bullish things for it and the overall crypto market. All in all, this global uncertainty has both risks and rewards for cryptos, and this is why I think that the coming weeks are going to be crucial for cryptos. And now, let's come to Dogecoin's current price movements. So after it had a remarkable recovery right after the recent crash, it appears that Dogecoin hasn't been able to find any significant momentum from there, and this is why we are now seeing that it has been moving sideways in the last 24 hours. The reason why I think Doge is unable to continue its upward momentum is that it has faced rejection from the 14 cents resistance level, and since Doge is trading below its moving averages, I think Doge may not be able to break through it in the coming days. However, I still believe that it is going to move to the upside in the long term, and even if this political situation puts pressure on the market in the coming days, I think that the long-term outlook for Doge is still pretty bullish. In any case, I'd like to remind you that this isn't financial advice and I'm not a financial advisor. So I'd suggest that you do proper research before investing anything into crypto. And with that being said, let's come to Bitcoin for a minute. So Bitcoin bulls have sustained recent rallies as the price of Bitcoin is continuing to move around the 38K and 40K price levels. And although Bitcoin hasn't been able to move above this level, the good thing is that it has avoided another sell-off. And while the sentiment for Bitcoin appears to be bearish in terms of its technical indicators, I still think that it can still manage to show positive trending in the coming days. Meanwhile, crypto analyst Matthew Hyland is saying that Bitcoin is currently sitting at a decision point, and he is saying that Bitcoin is now going to either blast past the 40K level or retest the 36.3K level, and it is potentially going to form an inverse head and shoulders reversal pattern. So what he is saying is that there is currently no clear bullish or bearish move from Bitcoin, and it can go in either way in the coming days. However, I think that Bitcoin is going to move above the 40K level from here since there are some bullish things happening for it. So we can see here that crypto analyst plans see is saying that about 61% of the Bitcoin supply has not moved in at least 1 year, and only 3 months ago, this metric was sitting at 54.5%. Now, we should note here that the all-time high record of the Bitcoin supply is about 63%, and it was set a month before Bitcoin began its massive move from 10K to 40K. So it means that if we take history as a guide, then Bitcoin's current supply is going to help it move to the upside in a month or so. And now, we are seeing this very important tweet from Analyst Tech Dev, and he is saying that Bitcoin's current structure is rhyming with its 2011 and 2013 structure. However, he believes that it is much slower than he thought it to be as days turn to weeks and weeks to months, and he is highlighting that what happened for Bitcoin during the first correction has also happened during the second correction. So we can see here on this chart that Bitcoin created a large impulse during the 2011 to 2013 cycle, and since this structure is very similar to the current cycle, TechDev is saying that he is bullish within the larger impulse, and this means that Bitcoin is again going to move to the upside in the long term. And another important thing for Bitcoin is just highlighted by analyst Steve, and he is saying that whether we are looking for a flat or a triangle, for this year-long sideways wave for Bitcoin correction, the higher low with 17% impulse we have just seen makes the bull case for Bitcoin stronger than ever. So this is just more and more confirmation that the overall outlook for Bitcoin is still pretty bullish, and it is going to have a massive run in the long term. Meanwhile, crypto analyst Justin Bennett is predicting that Bitcoin has established a local bottom and it is now going to hit the 50K price level in the coming weeks. So Bennett is saying that Bitcoin needs to see a daily close above the 39.6K level and then the 46K level, and if Bitcoin reaches these two key levels, this move will launch it back above 50K in the coming weeks. So while there are a lot of things going around in the global political scenario, Bitcoin is likely to sustain this pressure. And now, let's see what is happening with Ethereum. So Ethereum has managed to show some strength during the last 24 hours, and the good thing is that it has been trading in the green and avoiding a fall from here. From a technical perspective, its daily RSI value is now looking to enter the neutral zone, which means that the overall sentiment is turning bullish for it, and this means that we may see Ethereum moving above the 3K level in the coming week. And with that being said, let's see some important updates showing us that crypto adoption has been rising throughout the world. So we are now seeing that the first real estate purchase made with crypto has happened in Chile as the transaction made with Bitcoin secured a plot of land in Temuco, a southern city of Chile, for a customer. So this is positive news as we are now seeing the use of Bitcoin and other cryptos as payment options in real estate. And as per another update, we are now seeing that freelance workers in Argentina are now preferring cryptos as their paychecks as a way of collecting payments outside of the traditional financial system. And as per a report from global hiring firm Deal, they are seeing an increase in crypto withdrawals in countries like Argentina, and they currently offer withdrawals in Bitcoin, which is the most popular crypto in the country, among other cryptos. So this is just more and more confirmation of rising crypto adoption, and this is exactly why I remain bullish on Bitcoin and Dogecoin. And now, let's come to our altcoins roundup. So according to Into the Block, traders are continuing to hold Cardano and Link despite the crypto market's recent price crash. We can see here that the balance held by holders holding Cardano for more than a year is now at a multi-year high. Similarly, the number of Link holders has been continuously hitting new highs, and currently, more than 270K addresses are holding Link for over a year. So this is very bullish news for Cardano and Link, and this means that these coins are going to show some positive moves in the coming days. And now coming back to Dogecoin, the short-term scenario is looking pretty uncertain for it thanks to this ongoing geopolitical scenario and concerns of interest rate hikes. However, I still believe that Dogecoin is going to move to the upside along with Bitcoin in the long term. In any case, what are your thoughts on this? When do you think Bitcoin and Dogecoin are going to move up from here? Let me know in the comments section below.